Welcome to part 2 of my property taxes talks. In part 1, I spoke about principal private residence relief and lettings relief. Now let's move on to reporting the sale of a residential property on which a taxable gain arises and the process of reporting that gain. When you report a residential property on which a gain arises, this could be where you own a second holiday home, or a let property, or a property in which you used to live, which is now being sold, but is not entitled to full principal private residence relief exemption. Under the old rules, the important date was the date of exchange of contracts. This is when a sale and purchaser became bound to complete. Often, you will be aware that there was usually a couple of weeks between exchange of contract and completion, although this is not always the case. For tax purposes, the relevant date is always the date of exchange. If this date falls into the 1920 tax year, i.e. the year to 5th of April 2020, then that gain must be reported on your 2019-20 tax return, or reported to HMRC via their real-time capital gains tax service if you are not already reporting under self-assessment. The tax due, if reported on your tax return, would be payable on 31st of January following the end of the tax year. So let's look at an example. You sold a residential property and it has a taxable gain arising. Remember, each individual has an annual exemption available to set against gains arising. For 2019-20, it was £12,000. The date of exchange of contracts was 1st of April 2020. So, you will report this gain on your 2019/20 tax return because it was before the end of the tax year on 5th of April 2020. The tax due will be payable on 31st of January 2021. Under the new rules, the gain arising on the disposal of a residential property must be reported to HMRC within 30 days of completion, and the tax paid at the same time. Let's first look at the example and compare to the previous slide. Your property was sold on 10th of April 2020 and a gain arose. Under the new rules, you must report this gain to HMRC within 30 days of completion and pay the tax, so by 9th of May 2020. Compare that to the last example, and if the property is sold just 9 days later, you have to pay the tax 8 months earlier. So these are just a few notes, and you may have noticed that I've changed from talking about the date of exchange to completion date. It was confusing for us too when first announced, but clarity has now been provided. For tax purposes, calculations still use the date of exchange as the relevant point. So if you exchange contracts on 4th of April, but completed on 12th of April 2020, you would be caught under the old rules. If you exchange on 20th of April 2020, but aren't due to complete until 20th of September 2020, then you do not need to report the gain or pay the tax until 19th of October 2020. The gain would still be calculated using 20th of April as the relevant date, but you would be caught under the new rules. So let's just stand back for a second and think about this. 30 days is not a very long time. We all know from experience when moving house that it is a hectic time. And so what if you also need to report the disposal to HMRC? Will you have internet access in your new property? Will your post be redirected? Can you find all the papers that you need to calculate the gain? Which box did you put those receipts in for building the extension on the old house? I can foresee a lot of problems. This is why I've undertaken a number of visits to local solicitors to do this talk and contacted local estate agents to let them know of the new rules. Forearmed is always forewarned. Who is responsible for this anyway? Should the estate agent tell every client who is selling a residential property that they may need to report the disposal to HMRC? Is it the solicitor's responsibility when taking on a new instruction to check whether they have an accountant preparing the gain calculation? Strictly, it's not anyone's legal responsibility, but if I can just increase awareness of this reporting requirement, then hopefully less people will be caught out. HMRC have advised that penalties will not be charged for disposals made up to 30th of June 2020, but thereafter they will be similar to tax returns, so £100 for an initial late filing. Our advice is to get the information together early. You will know that you have to put the property on the market, and there may be a gain arising. Come and talk to us and we can prepare a draft calculation based on the market price. Once a formal offer has been agreed, that calculation can be amended, and indeed once expenses confirmed, a final figure prepared, and this may be well ahead of the completion date. HMRC will accept estimated reports, and amendments can be made up until either 12 months after filing of the form or on submission of your tax return. If you are not a self-assessment taxpayer, under the old rules, you would normally have to register with HMRC to report the disposal. Under the new rules, the system means that you do not have to do a tax return. However, if you are already a self-assessment taxpayer, you will need to do both. Firstly, report the gain, and then report again on your tax return, but show the amount of tax paid. So how do we actually report the gain? HMRC have set up a new system which joins up with Making Tax Digital for VAT and the Trust Register. Ultimately, the personal Making Tax Digital will also be on this portal, enabling all information to be readily accessible in the same place. In order for you to report the gain or authorise an agent, such as us, to do it on your behalf, you will need to have a personal tax account set up, and this can be done via gov.uk. I've already found issues with clients finding it difficult to locate the capital gains tax registration on their account, and in turn us as agents being unable to request client authorisation. This is why time is so important. Once the report has been filed, an email will be sent with the payment details, including the reference to use. If the disposal of residential property creates a loss, then you do not need to report within 30 days. If you think that you will have a gain arising later in the period in the same year on another residential property, then you may wish to claim the loss so that it can be offset. Losses arising after a gain on residential property cannot be used. Losses arising on assets that are not residential property cannot be used. Both of these can be claimed on the tax return and any tax refund obtained. If you have sold a property overseas, this must still be reported on your tax return and is not caught under these rules. If you are a non-resident in the UK and are selling a UK residential property, then rules for reporting the disposal have been in place for some time. But you now have to pay the tax within 30 days as well as filing the non-resident capital gains tax form. You can no longer defer the tax until 31st of January. So let's quickly recap. Where an individual sells a UK residential property and the date of exchange is on or after 6th of April 2020, any gain must be reported to HMRC within 30 days of completion and the tax liability paid at the same time. If you or someone you know may be caught by these rules, please contact us to have a chat. We're happy to liaise with solicitors and estate agents directly to ease the process and make sure stress levels are minimal. Thank you.